the ESO team. And today I'll be covering some important information about the end of tax year and any changes expected in the new year. If you have any questions during the webinar, please just leave your question, name and number in our chat option, and we'll make sure to contact you after the webinar to address your queries and concerns. So during the webinar, we will discuss your P60 for the tax year 23 to 24, and when you can expect this to generate, tax allowances and thresholds in the tax year of 24 to 25, and finally, how you can use your salary sacrifice pension to save on national insurance deductions. Your P60 shows the tax paid on your salary in the tax year, and that's from the 6th of April until the 5th of April. If you're working for an employer on the 5th of April, a P60 will generate to inform you of your earnings over the tax year, as well as the total sums paid in the employee national insurance contributions. Therefore, you may use your P60 as proof of tax paid during the tax year. An employer is obligated to provide a P60 by the 31st of May, and you may wish to use that P60 to claim back overpaid tax, apply for tax credits, or as proof of your income if you apply for a loan or mortgage. For the tax year of 23-24, the P60 will be made available in your employee portal by the 31st of May 2024. For anyone requiring a P60, any P60 information urgently, we'd encourage you to review your final payslip in the tax year, as this contains the same information as a P60. At Giant, we will generate a P60 for all workers that are actively working and receiving payment on the 5th of April. This means that if your P45 was issued prior to the 5th of April, we will not generate a P60, as the P45 information will confirm your income to date and your tax paid to date. If you believe that you are due a tax rebate, you may use the details found on your P45 to support your claim to HMRC. So this year's tax changes are very minimal, as the personal tax allowances and tax thresholds have been frozen at their current levels until 2028. In the tax year 2024 to 25, the personal tax allowance will remain at 12,570, which is the tax code 1257L. This means that your annual earnings, the standard tax-free allowance will be 12,570 annually, which is 241.73 per week, or 1,047.50 per month. Earnings above these weekly or monthly values will attract tax at the appropriate tax percentage. In the new tax year, the basic rate tax threshold will be applied on weekly earnings up to 996.75 and monthly earnings up to 4,189.25. This means that so long as you earn below 996.75 per week, or the 4,189.25 per month, you will be taxed at only the basic rate of 20% after your weekly or monthly tax allowance has been taken into account. If your employee gross amount exceeds the values mentioned already, the additional portion of your earnings will begin to fall into the higher rate, which is 40%, and an additional rate, which is 45% tax brackets. In the tax year 23 to 24, the tax week will run from Saturday to Friday. This means that if you are paid on Saturday and the following Friday, your two payments will fall within the same tax week. We highlight this as a caution, and it's known as a supplementary run, and it occurs when you are paid 2 or more times in the same financial period. Supplementary runs can result in increased tax on a second payment made within the tax week. For example, as the first payment receives the full benefit of any weekly tax allowances available. Therefore, please ensure that all timesheets are submitted and approved on time, so payment flow is in a weekly or monthly schedule. The tax week will run from the 6th till the 5th as usual. And finally, the first payroll in the tax year will receive 1 week or month tax allowance, irrespective of how many weeks or months are being paid. As an example, if you're paid on the 8th of April for 3 weeks worked in March, the tax allowances for March will not carry forward, as we would have entered a new tax year, so any allowances from the previous year would no longer apply. Tax is calculated when you are paid and not when the work is completed, so we will not be able to retrospectively apply tax allowances. This would mean that instead of receiving a 3-week tax allowance, you would be allocated only 1 week, which is the 241.73, due to the position that we are in the tax year. This may lead to slightly more tax being paid on this payment, as more of your income would become subject to taxation. However, if you're on a cumulative tax code, you would expect an adjustment to take place as the year moves on. This would not be an immediate adjustment. However, taxes typically adjust in accordance to income earned to date during the tax year. So now we'll move on to national insurance discussions. From the 6th of January 2024, there was a change made to the calculation of NI on earnings above the primary threshold up to and including the upper earnings limit, which saw a 2% reduction from the 12% to 10%. From the 6th of April 2024, deductions of employers' NI will decrease again to 8%. So who is not affected by national insurance deductions? Those earning below the low earnings limit of 9,564 per year, or that's 797 a month. Unfortunately, there are no other exemptions to this levy, as it is a statutory deduction, so all working persons, including state pensioners, will be required to contribute. This table confirms the most common national insurance categories, what they mean, and what employees and employers pay on their earnings per category. So currently, if you are earning above 242 per week or 967 per month, you will pay national insurance at 8% of your employee gross pay and an additional 2% on earnings above upper earning limits of above 967 per week or 4,189 per month. On the employer's side, there is a contribution of 13.8% from the assignment income, and that's the income received from your agency or client. When earnings are above 175 per week or 737 per month. The purpose of your national insurance is to contribute towards funds like your state benefits, which include the state pension, statutory sick pay or maternity leave, or entitlement to additional unemployment benefits. With the incoming changes, you may wonder how you can make savings on these deductions. Any workers contributing to a salary sacrifice pension will receive the benefit of saving on the national insurance contributions. A salary sacrifice scheme is an arrangement where you give up a proportion of your salary in exchange for an increased employer contribution into the pension scheme. With salary sacrifice, you can effectively reduce your pre-tax salary by a proportional amount, resulting in a reduction in your PAYE tax. Also, as the salary sacrifice amount is retained prior to the calculation of employers' national insurance and the employee gross pay, you will find a reduction in both employers' and employee national insurance contributions. In this current tax year, a basic rate taxpayer can expect to see a saving of up to $460 in tax and national insurance costs by participating in a salary sacrifice scheme and contributing £1,000. Whereas a higher rate taxpayer would see savings of $560 should they sacrifice £1,000 of their assignment income. In the upcoming tax year, basic rate taxpayers can expect to increase their savings on PAYE tax and national insurance. For every £1,000 sacrifice, they can expect a saving of $480, so additional £20. If you wish to receive more information on salary sacrifice, please contact the ESO team via the employee portal using the live chat or messaging functions. Salary sacrifice is available on the Giant Premium package. The net margin on this package is $39.50 per week, which works out at £20.14 after tax relief. In addition to the ability to participate in salary sacrifice, the premium package includes useful features like Giant Advantage, which is our cashback and reward scheme, faster response times, and private healthcare insurance. So if you're earning over $100,000 per year, your personal tax allowance goes down by £1 for every £2 that your gross taxable income is above £100,000 per tax year. This means that your personal allowance is zero if your gross taxable income is 125,140 or above. In these instances, anyone who earns over 100,000 should be submitting a self-assessment tax return for that tax year to see if any additional tax is owed. You can see the personal allowances set by HMRC on the government website and also the rules on self-assessments. An unexpected tax bill is not welcome by anyone, so we encourage you to check with HMRC. There are increases across the board for statutory payments, with sick pay increasing to 116.75 per day and statutory paternal leave increasing to 184 and 3 pence per day. The government have also announced there will be a change in paternity leave from the 6th of April. From this date, fathers will be able to take their 2 weeks of statutory paternity leave at any time within the first 52 weeks of the baby's birth. Although they will still be entitled to the 2 weeks of leave, from the 6th of April, the worker will be able to split this into 2 separate weeks as opposed to consecutive weeks. And a new SC3 form has been published to accommodate those changes. In summary, we hope you take the following points away with you. Your P60 will be available for 2023 to 24 on your portal by the end of May. The standard tax code will remain at 1257L. The tax week will run from Saturday to Friday. The tax month will run from the 6th to the 5th of every month. Employers' national insurance contributions are set to 13.8%. And the employee side will be 8% from April 2024. And finally, you can make additional savings by contributing to a salary sacrifice scheme. This does conclude our webinar for today, and we hope you found the session useful. If you have any feedback or suggestions on how we can improve our service, please let us know by completing the survey after the webinar. Should you have any questions down the line, please contact your support team via the portal or via the live chat option on our website. Thank you again for joining. It was really appreciated, and I hope you have a great day.